Welcome to TFN Smart Trading Action Alert. I'm Laura Cadden. Since China began to open up to Western commerce and industry back in the 1970s, huge changes have been taking place in the country. Not only is China still growing faster than all established industrialized countries, it's accumulated enormous capital reserves, created a gigantic manufacturing platform, and redefined the global balance of power. As a result, the largest middle class the world has ever seen has evolved out of the desolation of the Cultural Revolution. A class of consumers that likes to spend money on Western-style goods and services, entertainment, and if you look at the boom of the Macau gambling industry, Western-style vices. The resulting changes in spending behavior have also triggered changes in lifestyles. Instead of traditional foods, Chinese consumers are on the verge of surpassing even Americans when it comes to the consumption of fast foods. By now, most multinational food chains consider China their primary growth market. My guest today is Ann Sosnowski, editor of Diligent Investor Microcap Hot Sheet. Welcome, Ann. Nice to have you back.
Thank you, Laura.
So tell me, what do you account for this change in Chinese eating habits at this point in time?
Well, as you said, Laura, a lot of it is the westernization of China. Mainly, you have increased urbanization. You have people living in smaller, close quarters. You also have incomes that are rising and a lot of disposable income. So, you know, the Chinese want all these Western goods, mainly fast food. I mean, it's a faster paced environment, just like America is currently. I actually was reading the other day that 52% of Chinese eat fast food at least once a week, compared to only 35% of Americans. So, you know, we think we eat a lot of fast foods. No way. China is definitely surpassing us in that capacity.
So what do you feel is the growth outlook for companies such as McDonald's or KFC in regard to their expansion in China?
Well, KFC is owned by Yum Brands. The ticker is YUM. They also own Pizza Hut as well. KFC is the biggest fast food restaurant in China. Currently, there's over 1,800 KFCs. McDonald's currently only has 800 storefronts. There's a huge growth market right there for McDonald's itself. While KFC plans to open over 300 stores by the end of 2007, they're mostly sit-down restaurants. McDonald's actually has the ability to open drive-through restaurants, which is a huge market for growth for them. And they're actually planning to open 250 in 2008 itself, just drive-throughs.
Quite a coup for them.
Absolutely, absolutely. An interesting statistic actually is that because KFC has so many restaurants there, number one, their growth potential, of course, is stunted compared to McDonald's, but also they are second only to army bases in China. So yeah, there's almost more KFCs than our army bases, which is kind of an interesting fact.
So what do you think will be the perhaps immediate fallout of this change in direction as far as food goes in China?
Well, since 1991, you saw rice start to decrease in production. Of course, China is known for its rice production. Corn actually at the same time has increased about 32% since 1991 until 2003. At the same time, because 1991 was when a lot of these fast food restaurants came into China, they needed more livestock for the burgers, for the hot dogs. They also needed corn for the buns and all of that. The corn production increased by about the livestock production increased by about 52%, the same time that corn increased 32%. So there's definitely a corollary there. You're going to continue to see, I think, corn increase incrementally, rice go down, and of course, livestock production.
So is there certain companies you think are best poised to profit in the short term?
Obviously, in China, you have a situation where many agricultural companies are going to profit. You definitely want to look at livestock companies. Specifically, the one microcap stock that I found, it's the only public hybrid seed company in China, is one I'm recommending currently to subscribers.
Why is this so optimal?
Actually, earlier in the year, China took a $3.4 billion industry and opened it up to this company. Before June of 2007, you had very small government operations that were providing seeds to small towns. All of a sudden, the government said, you know, you have to liquidate your supplies immediately. We're going to pretty much nationalize it. This seed company is the company that's going to get all of these supplies at low prices and be able to sell them back at a high profit margin. Additionally, the stock is extremely undervalued at $8. The company knows this actually because they just initiated a $10 million stock buyback. You're also seeing the Chinese government support this company by giving them $1 billion for a research and development facility for hybrid seeds, mainly corn. And you also have the company, actually, the biggest news right now is that they're buying a fertilizer company to go along with their seed production. So this is actually, it's huge because the market cap for this fertilizer company that they're purchasing is half of this seed company's current market cap. So it's gonna go blockbuster. I definitely feel like there's about 131% growth right there right now for the stock in the next 3 months.
So can we get you to write up something about this, additional information for our viewers?
Yes, I can make it available to current viewers if they would like to see it.
Wonderful. Thank you so much, and thanks for the information.
Thank you.
Additional information on Ann's stock pick will be posted on the homepage of TFNfinancialnews.com under the Investment Strategies section. To learn more about Diligent Investor Microcap Hot Sheet, go to www.microcaphotsheet.com. Please join us next week for another opportunity for profits on TFN's Smart Trading Action Alert. For Ann Sosnowski and TFNfinancialnews.com, I'm Laura Catton.